Assalamu alaikum guys, welcome to my YouTube channel. In this video we will discuss about insurance, kinds of insurance and conditions for insurance. First of all, we will look at the introduction of insurance. Insurance, a system under which the insurer for a consideration usually agreed upon in advance promises to reimburse the insured or to render services to the insured in the event that certain accident occurrence result in losses during a given period. It thus is a method of coping with risk. Its primary function is to given period. It thus is a method of coping with work risk. Its primary function is to substitute certainty for uncertainty as regards the economic cost of loss producing events. Insurance relies heavily on the law of large numbers. In large homogeneous population, it is possible to estimate the normal frequency of common events such as death and accident. Losses can be predicted with reasonable accuracy, and this accuracy increases as the size of the group expands. From a theoretical standpoint, it is possible to eliminate all pure risk if an infinitely large group is selected. From the standpoint of the insurer, an insurable risk must meet the following requirements. The first one is the object to be insured must be numerous enough and homogeneous enough to allow reasonably close calculation of the probable frequency and the severity of losses. The second one is the insured object must not subject to simultaneous restriction. For example, if all the buildings insured by one insurer are in an area subject to flood and a flood occurs, the losses to the insurer underwriter may be catastrophic. The possible loss must be accidentally in nature and beyond the control of the insured. If the insured could case the loss an element of randomness and predictability would be destroyed. Now we will discuss about kinds of insurance. Property insurance. Two main types of contracts, homeowners and commercial, have been developed to insurance against loss. Homeowner insurance. Homeowner insurance covers individual or non-business property introduced in 1958. It gradually replaced the older method of insuring individual property under the standard fire policy. Perils insured in homeowners policies, of which there are several types. Coverage can be all risk or named peril. All risk policies offer insurance on any peril except those latter excluded in the policy. The advantage of these contracts is that if property is destroyed by a peril not specifically excluded, the insurance is good. In named peril policies, no coverage is provided unless the property is damaged by a peril specifically listed in the contract. Property covered. Homeowner forms are written to cover damage or loss of not only an owner dwelling but also structures such as garage and fences, trees and rubs, personal property excluding certain listed items, property away from the permission such as boats, money and securities. Limitation on amount recoverable. Recovery under homeowners forms is limited to loss due directly to the occurrence of an insured paralysis caused by some intervening sources not insured by the policy are not covered. For example, if a flood or landslides, which usually are excluded perils, severely damage a house that subsequently is destroyed by fire, the homeowner's recover from the fire is limited to the value of the house already damaged by the flood or landslide. Recovery under homeowners farms may be on the basis of either full replacement cost or actual cash value (ACV). Under the former, the owner suffers no prediction in loss recovery due to depreciation of the property from its original value. This basically applies of the owner to out coverage that is at least equal to named percentage. For example, so percent of the 80% of the replacement value of the property. Conditions. Homeowner places may include the following conditions. The first one is owner are required to the give immediate written notice of loss to the insurer or the insurer is agent. The second one, the insured must provide proof of the amount of losses. This suggests that owners should keep accurate records of the item in a building and of their original cost. The third one is the insured must cooperate with the insurance is settling allows. The fourth one, the insured must pay the premium in advance. The fifth one, the insurer has a right of sub organizations. The sixth one, mortgages interest in a property can be protected. The seventh one, the policy may be cancelled by the insurer upon due notice, usually 2 days. The eighth one, the fraud by insured, including misrepresentations or concealment of material facts concerning the risk, is ground for denial of benefits by the insurer. Also available is a form called renter insurance, which provides personal property insurance for tenants.